Hi everyone, welcome to another Fat Daily podcast. Today I'm joined by Brian Chu to explore a fascinating perspective on how we measure value in our financial system. Now, Brian, welcome buddy, how you doing?
Good, thanks, Woody.
Good. Now, your latest piece challenges us to think differently about prices and wealth by using gold as our measuring stick rather than fiat dollars. So, what caught my attention was how this different lens completely changes our understanding of things like property prices and income levels over time, and what this might mean for investing in 2025. So, let's dive in. You make a point about using gold rather than currency as a measuring stick for value. Could you expand on this idea? How might this different perspective change an investor's decision making process?
Yep. So I think a lot of people are aware of the famous saying about how gold used to buy a toga for a man in Rome, ancient Rome, and that a man in the 1930s could use a bar of gold, of course, the same size, probably an ounce, to buy a business suit and even have a bit left over to feed the family. And then today, 1 ounce of gold would buy you a very nice business suit, not just ones that you get in a retail store, but like a tailor-made designer business suit. So time and time again, the same amount of gold actually buys and retains, like it retains your purchasing power, and it buys you a similar amount of goods as it was in the past and currently. The only difference why we don't see that so much is because of technology. So mobile phones, notebook computers, even cars, they've cost less over time. And we think that in dollar terms, we always think of everything in dollar terms. And because gold has largely moved out of the broader understanding from the public doesn't really understand gold as much anymore. So therefore, the value of it in dollar terms has gone up, and no one really thinks about buying things and comparing what they can get with gold. So if we go back to the basics and look at what gold can buy you nowadays, and use that as a um, basis for how you save up and measuring your wealth, that might that might change the difference between a comfortable living standard and one where you're struggling to make ends meet on a month to month basis.
One of the examples you give is that you show how Sydney property prices, when measured in gold, tell a very different story than when measured in dollars. How do you see this relationship playing out in 2025?
Okay, so a bit of context on measuring like the real estate prices in one of the world's most expensive cities. Like most people know that Sydney and Melbourne, and recent times I think Brisbane and Adelaide is also creeping up that ladder. We are one of the most unaffordable. We have one of the most unaffordable housing markets in the world, and that's because there's been increasing immigration. There's also increasing regulations and limited supply of land, as they claim, for developing property. We also had very lax lending standards for many years, and this mindset of property. When you watch TV, when people talk about things, when they talk about it in a party, so property prices have gone up significantly in dollar terms. But if you look at it in gold terms, an ounce, like how many ounces of gold it takes to buy a house, the world's second or third most unaffordable housing market in Sydney is no more expensive than what it was in around the 90s. And
Mm.
that might surprise a lot of people because they think the runaway house prices related to the dollar or other currencies. But in terms of gold, the housing market in Sydney hasn't really gone too far.
You talking about that comparison. You also present some compelling data about how average incomes have actually decreased when measured in gold terms. What implications do you think this has for investment strategy, particularly if you're trying to preserve wealth in a high inflation environment? And as we all know, it was only last week official inflation ticked up again, didn't it?
Yeah. In fact, if you look at the official inflation figures and the actual inflation that we're experiencing in
It's
the
probably far greater.
supermarket, much higher. Yeah. At the petrol pumps, when paying your electricity and gas bills, and what you get in your paycheck. I mean, for most people, if they have a job, they don't always enjoy raises of like 7 or 8% per annum. Only if they're lucky or they get promoted, but you rarely get promoted once a year. You get promoted once every couple of years, but not once a year. But inflation, true inflation in the grocery stores, the petrol pumps, and your utility bills have gone up easily by 7 or 8% each year. So if you look at the income relative to gold, that's even more of a disturbing trend. Australians were the richest, at least in terms of what they were bringing home to so that they could spend and save up. They were richest in the turn of the millennium. One that the average Sydney worker was bringing back home, if I recall, about 100 ounces of gold a year before tax. In today's terms, that is $430,000.
Mm.
Now, the average Sydney worker is now making about $101,000. Back in 1999 and 2001, the average Sydney worker would be paid in today's terms equivalent to a senior executive of a large company. And how many people are getting paid like that? I'm pretty sure not a lot.
Mm.
And what the implication of this is, people end up having to borrow more. They also they also are facing rising housing costs, and that means bigger mortgages, dual income households. How can gold help people? And this is not financial advice, but just a way to change your thinking. Where most people, if they have a bit of savings set aside from their pay packet, they will put it in a term savings, a term deposit account, or maybe they might buy shares or they use it to pay down their mortgage. But if part of that was set aside to buy a little bit of gold, and you don't have to go into a bullion store to buy a gold coin, but you can actually buy smaller units of it, say in an ETF, or every few months you go and buy a gold coin. Just think, last year the price of gold went up by 38% in Australian dollar terms. So how did that compare to most assets? It actually was ranked very high. Of course, cryptos dwarfed the performance of gold, but the volatility, as in how variable the prices are, gold is way lower. And to my understanding, property prices did not rise by 30% in 1 year in any time in the last 30, 40 years.
Mm.
It's a one-off, I believe. I can't guarantee that gold will rack up another 20, 30%. Although, given where we're heading with central banks cutting interest rates, with rising government deficits that require them to borrow, and corporations and households wanting to make ends meet, there's going to be much more debt in the system and much more liquidity, and generally asset prices are likely to continue going up. And I believe gold will also continue to ride the wave, maybe not as big as last year, but I think it would still be sizable enough to beat the returns one would get putting it in the term deposit account.
Talking about returns, that means you have to invest in it. And finally, what you mentioned different ways to get exposure to gold, physical ETFs, and mining stocks. How should investors best balance these different options in their portfolio? Let's end the conversation with that question.
Yeah, so I can speak for myself, and everyone should weigh up their own risk preferences and what they can handle as well as what they can afford. So I like to take the bull by its horns, pun intended. I live life on the risky side still, so I usually expose myself more to gold mining companies, and some of the gains that I've made, I would then harvest it and put a small portion of that into gold ETFs or to buy some silver coins or silver gold coins or gold silver coins. I recently just picked up a bit of silver bullion from Melbourne. Actually, I'm actually staying in Melbourne right now in a motel, and we'll be here for a short time. But yeah, picked up some bullion. Quite happy with it. I can't believe that bullion prices have doubled compared to when I paid for something similar 5 years ago, 6 years ago. And in fact, I think silver's increased by 150% in 10 years since I
Silver and
first
gold
bought
have
my silver.
increased, or the value of your paper dollars have gone down?
Very, very good point. Actually, that's exactly one of the key points of my article. It's that gold and silver hasn't really changed, but because there's more currencies around, you need more of that currency to buy the same amount of gold and silver. So that's what I've been doing is taking risk in buying gold stocks because they're undervalued, especially the explorers and the early stage developers, what one would call collectively the junior miners. Those are much higher risk, and the only reason why I'm exposing heavily on those now is because they are so undervalued relative to the more established gold producers that have had a pretty good run since September 2022. There's been a recovery, and most of the producers, if you've been paying attention and following those, they've done quite well. There is still some upside, but the greater upside is in the explorers and early stage developers. But those ones, I have to be very careful about it because these companies regularly need additional capital in
Yeah.
order to keep the lights on. So I have to be very selective. But otherwise, I hold very little cash simply because it's for transactional purposes only, and the purchasing power of cash keeps falling.
Good note to end on, Brian. We'll leave it there. If you'd like some further to read further the article that this discussion is based on, please check out the link below. It's totally free. It'll take you to Fat Tail Daily website. Check it out. And thanks, Brian. Much appreciated. We'll talk to you next week.
Thanks very much, everyone. Happy New Year and God bless.